When we prepare sets of accounts, we as accountants talk about accounts. And people go, Martin, what's accounts? What do you mean by accounts? What's all of this stuff? Primarily, a set of accounts gives you historic information. So it tells you what were your sales for the previous year. It tells you what were your costs for the previous year. And ultimately, when you're looking at those numbers, they're not going to tell you anything that your gut doesn't already know. All they are probably going to tell you is the number that says tax. And it's going to say, well, based on that profit, the tax that I have to pay is this. When have I got to pay the tax? And obviously, if you're a sole trade, you have to pay it by the 31st of January. If you're a limited company, you've got to pay it 9 months and 1 day after the end of your accounting year. And you go, great. So what else do the accounts tell me? Well, they sort of tell you what the value of the company might be if you use some calculations. But ultimately, a value of a company is only what somebody will pay for it. Okay, so why do I have to do this account stuff? You have to do this account stuff because regulations say you have to do the account stuff. Okay, right, brilliant. Good, so I have to do it because I have to do it. And there's a cost for doing it. Yes, there is. But I want to grow my business, or I want to sell my business, or I'm thinking of investing in something. Okay, but a year-end set of accounts is not going to give you that information that you need on an ongoing basis to enable you to make those decisions. Okay, so I'll just come to you, Martin, and you'll tell me what the answer is. Yes, of course I can tell you what the answer is, but whatever the answer is based on information, right? But that's historic. Yeah. Why don't we change that accounts conundrum from historic to looking forward? Or at least, if not looking forward, to looking at the speedo now. What do you mean by that? Well, if you imagine, let's take driving a car. So we're driving along, we're quite happy with life, and we do these things called accounts. And I say, yeah, but accounts are like looking in the rearview mirror. Okay, so like objects could be nearer than they are. Well, yes, they could be. So those accounts could be, I've done them within 1 month of my accounting year end. Okay, brilliant. So the object is quite close at the moment, isn't it? Okay, right, because it's 1 month. Okay, but then you decide, something's happened. The world has taken over. COVID could have happened. We could be another pandemic, any of that sort of stuff. And that will delay your ability to prepare accounting information. So suddenly that historic stuff is now looking like it's quite far behind the rearview mirror, and it's not enabling you to drive the business forward. So looking forward, you then go, okay, that's a forecast. So I understand that. So the stuff in the distance is my forecast. But how do I measure that bit in the middle? And ultimately, measuring that bit in the middle is where management accounts come along. Oh, you said accounts. Yeah, but accounts are about historic stuff. Management accounts are much more current, and they don't have to be in a specific format. So if you decided that actually the way in which you wanted to manage your business was based on the number of widgets that you sold, or how many, take an accountant, it might be the number of hours that you billed in a month or something like that, that becomes a key performance indicator, a KPI. And it might be that's the only thing that you are interested in trying to manage your business. I go, right, okay, but when are you monitoring that? Because you can't monitor it in your rearview mirror, because we know objects in the rearview mirror maybe are closer than they are. And generally speaking, they're quite a long way behind by the time you get to that point. You need to have that KPI much more current. It's like the speedo of the car, isn't it? You need to know where that KPI sits so you can adjust it, you can tweak it, you can do things with it. And what you then need to do is then build from that KPI into, okay, I need to know what my overheads are. Because if I know what my overheads are, I know how much it's costing me. If I know how much it's costing me, I can look at it and go, okay, I'm spent £300,000 on online advertising in the past 8 months, and that's generated me X thousand pounds worth of sales. Well, no, that's not a great return. Yes or no, it might be market reasons for that. But the important thing about it is you can now start actively looking at that number within your accounting year. And it's not this number that suddenly goes, I didn't realise I spent that much money, when I'm sometimes 8 months after the 12 months in which I'm reporting on. So management accounts become this document, this live document that enables you to look at the speedo that you're going at. And you can vary that speedo accordingly to what's going on in the outside world, in the economy, in okay, I'm going to invest in this. I want to see how that works. But they can be set up to work on things that are important to you, important to the business, not necessarily in terms of what does the tax number look like. Okay, ultimately the tax number will come out the bottom and you suddenly get a feel of tax doesn't become this number that I have to pay at the end of the year, but tax becomes this management number or this management that I can then deal with it. It's not just, oh, well, it's just this, well, why couldn't I do that? You can decide to do things as you're going along. You can decide to go, okay, right, I need to employ a member of staff now because these numbers are getting out of kilter. Or, hold on a minute, I've got these number of staff. Why aren't they generating the level of income that I'm expecting? You can make those decisions on a much more current basis. And what you then need to do with those numbers is discuss it with somebody. Don't just go, okay, I've got those numbers, I've got those KPIs, that's brilliant. Okay, who am I going to talk to? It might be that you don't want to talk to your accountant. It might be you don't want to talk to your lawyer. It might be that you don't want to talk to the people that are in your business. But the important thing is about talking to somebody that is going to challenge you on those numbers, but challenge you constructively, not just going, well, they're a load of rubbish, aren't they? Brilliant. Good discussion. Thanks for that. Well, I already knew that they were bad. Now I feel really good. That is not a helpful discussion. It's not a helpful discussion all of the time, especially not when you're running a business. And if you're on your own in an owner-managed business, it's just you. And somebody tells you, well, they're bad. Brilliant. Good. Well, now what do I do? Because I'm now in this spin that I have to keep changing and then going down and it all becomes challenging. But having those constructive discussions with accountants, with business mentors, whatever it is, they will challenge you in the right way to go, you said it was going to be this, but it's that. Why is that? Okay, this happened. Okay, but does that mean that's going to carry on? Because if so, we need to reflect those in our figures and how that works. Without those discussions, it becomes meaningless. If it becomes meaningless, what's the point of doing it? Because we all have a finite amount of time that we can do it. I guess, in summary, conclusion, whatever word you want to use, management accounts are a live document that allow you to more accurately, but maybe not accurately, but certainly more proactively manage your business to enable you to meet the goals, the challenges, the aspirations that you have, and therefore make your life ultimately easier and allow you to concentrate on the things that generate you money. My name's Martin Cavey from Chorus Accounting. Please comment below or send me a direct message if you want to know more.